Hey everybody, it's Wednesday, August 20th, 2025. Our episode begins with our headline, and I quote, "The system's financial vulnerabilities notable," Fed minutes say. Here's the full quote directly from the Fed minutes themselves, released today at 2 p.m. The staff provided an updated assessment of the stability of the U.S. financial system and, on balance, continued to characterize the system's financial vulnerabilities as notable. The staff judged that asset valuation pressures were elevated. In equity markets, price-to-earnings ratios stood at the upper end of their historical distribution, while spreads on high-yield corporate bonds narrowed notably and were low relative to their historical distribution. Key points here: financial vulnerabilities are notable, price-to-earnings ratios are really high, and junk bond spreads are really tight. So it's not just guys with crystal balls that see potential hazards ahead. Moving on to our community topics. What moves, if any, did you make today and why? Robschild buys Target stock. Target reported today we're getting a new CEO. They also reported revenue being lower in this quarter of this year than it was last year. And so in pre-market, Target was selling at $94 a share, which is where I bought it, about 10% lower than the previous trading day's close, but today now closing only 6% lower. It's the same story for the past 100 years. When companies are growing their revenues, the market sees that as an infinite trajectory into the future, that it's just going to keep growing that much or accelerate that into the future. Also, when earnings start slowing down to the upside or even contract a little bit, all of a sudden the market starts pricing in, the revenues are going straight to zero. It's a phenomenon that gets companies priced with way too much growth and way too dangerous. That's how stocks can go so far up and then also so far down. Opportunities can be in companies like this that have slightly declining revenues when the markets are assuming too much continuation of declining revenues. So much so that the valuations start to get a little bit ridiculous on the downside. Now, Target's current PE ratio is around 11, which is already a sign that it's pretty low for such a big, prominent company to have such a low PE ratio in the first place. And the kicker for me is you go to macro trends and you get the EPS, earnings per share. You highlight the last 10 years, get the average price. You take the price of the stock and divide it by that average number, and that's how you get a 10-year average earnings rate, and currently it's only 15.8. Typically, a healthy, prominent company a fair price is typically around 25, so a lot higher than 15.8. Even if this were to only rise to a 10-year average earnings PE ratio of 20, we'd see around a 30% gain in the price, which is very attractive for value investors like myself. And I wasn't alone. The whole day, the price drove up and away. I could easily see other value investors like Warren Buffett or Michael Burry taking a stake in this company at this time. And my current exit strategy is to sell it around $130 a share, which is a lot more fair of a price than where it is right now. One last piece to this before I already did forget. Point is, change of a CEO for some retail investors might be like, oh no, what's happening? That's actually typically a very good thing for a company. When you have a change of management, that is typically seen as a good thing by value investors, including Benjamin Graham himself. That's what I did today. What did you today? Comment below and tell me why. Second community topic, expect a very late show tomorrow. I won't have one coming out as early as I normally do. It's very unfortunate because tomorrow could be a huge day, but Friday is going to be the much bigger day with Jackson Hole. I expect my show tomorrow to be released maybe around 11 or 12 midnight. So coming up tomorrow, one thing I didn't mention previously, the leading economic index. This has been absolutely collapsing, and it can't just keep going down without a recession. The coincident report is released alongside this, and the coincident report hasn't been following it yet. But you know, I mean, if it bottoms, then maybe everything really is okay. I think it's probably going to just keep dropping. It has been. So we'll see. I'll give you an update on that tomorrow. We also have PMIs coming out and weekly jobless claims and Walmart earnings coming out before the bell in the morning. And like I said yesterday, this can be a market mover. They give a lot of good data as far as what's going on with the retail industry. What are people able to buy at Walmart? What are they not buying at Walmart, etc. And then Friday, yeah. So Powell, like I already mentioned, at Jackson Hole, 10 a.m. If you can watch it live, it's probably worth watching. And as always, tariff updates. Thank you for watching, liking the videos, subscribing to the channel, commenting, and supporting Robschild. No changes to the website. Read it to understand my macro views. No changes to the crystal ball ratings, and the Robschild portfolio has been updated with a new stock target added to it today. Today was a pretty wild day in markets with the S&P 500 dropping and then recovering. Same exact thing happening in the NASDAQ 100, the triple Qs. Same thing happening in one of the major market leaders, NVIDIA stock, along with the rest of the semiconductor index, SMHETF, dropping and recovering. Like clockwork, the VIX spiked up and then dropped back down, and the 10-year Treasury note yield dipped and went back up, so the run to safety and then back out of safety a little bit, basically flat. The biggest thing that's on my radar right now, like we talked about at the beginning of the show with the credit spreads, this is HYG. This is junk bond. These are junk bonds. When you have HYG divided by SHI, you can get a taste of where the spreads are going. We have had three red candles in a row on this now. Typically, when we get that, it's a pretty bad sign. Pretty much every time that happens, if you go back through this chart, when you get the 1, 2, 3, we tend to go into a waterfall, actually, pretty consistently. So I sort of am seeing this as accelerating to the downside. As it does, I'm keeping my eye on the fund HYT, another junk bond fund with higher beta. So in the event that junk bond credit spreads spread out and then tighten again, you can get a pretty safe return. What I mean is that, remember what a bond is. A bond is like guaranteed, you have to pay it no matter what. When these things go on discount, they are worth buying. I plan to start inching into HYT when we get a 10% correction in this fund. So that will be around 890. I'll start nibbling on it. I kind of expect this to blow out much further, but I will begin buying some junk bonds at that level. Next, Bitcoin had a bounce today. There's nothing bullish about this chart to me. It just looks like a dead cat bounce. I think Bitcoin is headed much lower. I talked about in the previous show MSOS, one of the ETFs that I'm holding, how it sort of cracked the neckline of this head and shoulders top, and I said, hey, it looks like we'll probably head back down to the scene of the crime, the breakout, the peak of this upside down M pattern that had developed. That would be highly normal. So that didn't happen. We went straight back up, and so now this is starting on a 4-hour time frame, starting to look more and more like some sort of bull flag looking thing. Again, the rescheduling of this product it's on the docket of things to do over this week, over next week, straight from the horse's mouth. So I'm holding the rumor till the news is sort of my play on this at this point. As much as I expect the market to continue following its leaders to the downside, the S&P 500 closing down today, we had a divergence with the advanced decline line actually ticking higher today, which can signal some strength actually coming back in. With that in mind, my expectation for the rest of the week is tomorrow a bit higher in the S&P 500, and then Friday when we find out that, how hawkish Powell is, which is what I'm assuming right now, we get a much larger move down. Last chart of the day is actually XLP. This is an ETF that tracks consumer staples. It's a chart that looks strongish. Not many people are even aware of funds like this. They know their Nvidia stock, they know their Microsoft stock, they know Bitcoin, but consumer staples, that's boring. And so it's often like a smarter money rotation kind of a thing. When this starts gaining strength, it's the market signaling like we're going into safety now. And this chart is just a little interesting here because it looks like we're at sort of a triple top here, and so this can act as a place where we could have a breakout much higher, or this could act as major resistance. Hard to say. I'm only really bringing it up because it's been showing pretty clear strength lately with higher highs and higher lows. That's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time at Robschild.